There's really two pieces of work that I've done. One is what I call the birth rate of small caps, and I've looked at the companies in micro caps and small caps that are less than 3 years old. So they're quite new, they don't have a lot of history or they're recent IPOs. And this birth rate does signal that there's been a very high liquidity boost into small caps, and also looking at loss-making companies. So if you look at loss-making companies and companies that are under 3-year-olds, the incidence of that is very high. We're talking about peak levels that you saw in 2000, 2007, and now you're seeing it in 2016 in last year. And after that period, which is happening right now, is rolling over. So that liquidity peak that you saw in 07 and 2000 and 2016 is now becoming a shakeout year, where those very young companies are showing themselves that they're actually riskier than you believe, that the history of these companies is short, and because of that they're not as resilient as you'd like them to be. And those loss-making companies that had very incredible valuations and in some cases no earnings are really showing to be potentially, disappointments. And you're seeing that come through in a whole range of areas, particularly retail and software, and those profit warnings are coming through. Also, the stagflation in small caps and stagflation generally in the marketplace is straining relationships. So when you've got young companies and early stage companies or undeveloped businesses, that's really forcing relationships between suppliers and customers, or suppliers and prices, and who really makes the margin when you've got top line sales pressure, which is driving margin pressure between the parties that contribute to making the margin for the business. And that for me is really a function of stagflation sort of moving to the next stage into small caps. And that's really driving a lot of profit warnings as well within the small cap market. For those reasons, I am really underweight small caps and much more into mid caps, just because of established history, high resilience in the business, and much greater cash generation or earnings visibility for those businesses. And that's really why I'm up in mid caps much more than small caps at the moment. I do think this shakeout period is potentially a 2017, 2018. It's proven to be sort of a 2-3 year cycle from the top down to the bottom. So if 2016 was the top, then you've got 2017, 18, potentially 19 as a cycle coming down. And you've seen bankruptcies and profit warnings heading towards high levels for those IPOs that seasoned in 2014, 2015 and 2016. And as that seasoning happens, you're seeing that liquidity and speculation unravel within the small cap market. And I do think there are a couple of years to go.